Okay, well, let's for a moment assume that the dystopian vision is more likely than the utopian one, and that you're right, people aren't prepared to take the tough decisions. How do we as individuals survive it? How do you plan to survive it with your own life planning, your own wealth planning? How do you put all your money into gold or what?
Well, there are many decisions that you have to do as an individual. The first one is how you prevent yourself from becoming obsolete, either because of AI or globalization or something else. So if you're a young man or woman going to university or college, I would say you need to understand technology because the future is in technology. So you have to have a major in something related to STEM. And probably you need a minor in liberal arts. You have to know how to read well, write well, think well in a critical way, because you'll have to change jobs many times over your lifetimes. But you have to be well-rounded to be able to survive and thrive and prevent yourself from becoming obsolete too soon. That's on the individual level. Then on the financial side of it, in my scenario, global equities are going to have a significant downturn. Even bonds are going to make you lose money because yields go higher and the price is falling. So you need to find financial investments that are a good hedge against inflation, debasement of fiat currency, political and geopolitical risk, and also environmental risk.
So that's property.
A combination of, I would say, first of all, you need short-term bonds that reprice with higher interest rates. Today you can get 4 or 5% on a 1-month treasury bill or gilt. That's already good enough. You want to have inflation index bonds that are going to do well when inflation is higher. Probably you want gold and precious metals and some of these green metals whose value is going to be higher when you have inflation, or you have climate change, when there is debasement of fiat currency. If there is going to be geopolitical instability, the Chinese will have to dump dollars and go into gold that cannot be seized by the US or the West. And you need also real estate that usually tends to do well when inflation is higher, because land and real estate, commercial, residential, is in fixed supply. But with one caveat, in good parts of the world, lots of real estate assets are going to be stranded. Sea rise level, hurricanes, typhoon, floods, wildfires, drought, you name it. So you have to invest into sustainable types of farmland, of commercial estate and residential, because there'll be lots of stranded assets also into real estate. And some combination of these assets create a portfolio that is a good hedge against inflation, against political and geopolitical risk, and environmental risks.
What about things like cryptocurrencies?
Well, I've been a huge skeptic of crypto. First of all, calling them currencies is a total misnomer. They're not a unit of account. They're not a scalable means of payment. They're not a stable store of value. They're not a single numerator. So anybody who knows anything about definition of money knows these are not currencies. Bitcoin has lost 80% of its value in the last 12 months. The other top 10 are lost between 80 and 90%. And about out of 20,000 ICOs, initial coin offering, 80% of them were a scam, and another 17% has gone down to zero. So out of 20,000 of them, 19,300 have also disappeared, literally. So it was a bubble. This is just a fad, and it's gone bust. And unfortunately, lots of people were young people, day traders, were suckered into buying at the peak. A year ago, Bitcoin was 69. Today is around 16, 17. And those who bought at the peak and lost their shirts and their savings are now in big trouble.
So